Good day, guys. I'm saying Bitcoin is dead. Gold's at all-time highs, and where's money rotating to? It's a really negative comment there. My name is Rudo. This is the CryptoEMC channel. We talk crypto trading, trade for a living. And today I want to talk about rotating gold, rotating your money or your alt bags that might be underperforming into some of the metals. So I want to be charting the metals, and I do have a friend in the background there, metalhead. He just needs to have a big metalhead poster there as well at the back of his. We're going to bring him in now, and he's going to weigh on some thoughts on this topic as well. So basically, what sparked the idea was a simple question. I'm just asking: is there a fundamental case to argue that money will go into metals like copper and so forth? And yes, there's a real good fundamental case for that. And we're going to go through this information together today. And in doing so, we're also going to be looking at the charts. Before we do that, however, I'm going to just cut the music and I'm going to get serious with you guys. I'm still crypto. I'm still crypto's best. Crypto's everything. But at the moment, Bitcoin is failing the digital gold narrative for various reasons. We can debate that at length till death. And because I'm still crypto, I just want to quickly, as always, look at Bitcoin and give you guys a real good idea of where my thoughts and my stances on Bitcoin. I still believe Bitcoin is going to give us a relief rally to at least 105, 108, and so forth. The fact that we're chopping around in a range is nothing funny if you're considering the amount of sideways action we had with Bitcoin leading up to its all-time high at $126,000. I mean, there we were almost for the lack of about 6-7 months within that range. So Bitcoin being in a big range means that institution wheels drive turns a little bit slower. They will be holding price within a range to accumulate this a little bit slower. And we do know this. It's fact. It's not me. It's not an opinion. It's on-chain fact that the institutional ETF buying is still more than the amount of Bitcoin that's manufactured or mined, not manufactured, every day. And that means something. It just doesn't, at this stage, tell us whether the rotation is strong enough to drive price higher. And that's the drawdown that we have. Using the buddy indicator, which makes life a little bit easier for you guys, we can look at Bitcoin, and it clearly says that the trend is bearish, but the momentum analysis is still pointing to a bullish breakout. Price reclaims support, and you don't want any more lower lows, which means very simple. If we can reclaim that, we'll go, and we don't want any more lower lows. That's as simple as that. Strong momentum at this stage. Yes, you can argue that there's still strong momentum, but considering the weekly time frame, we just need to understand that we need to be patient. Gold running now, silver running now. Why gold not run? Why Bitcoin not running now? We tend to think that way. But if you consider the time scale of this move, we're still fine. I'm just going to bring the mic closer and down. Maybe this sounds a little bit better. So we still have a lot of, well, let's put it like, considering the weekly time frame, there's nothing wrong with the amount of time we're spending consolidating right now. It's actually healthy and okay, and it's par for the course. Then the last thing is, as I always say, 3-candle rule. When this weekly time frame turns blue, that's going to be the cue for swing trading there. So don't try and be the guy that buys the bottom, because that bottom buyer, the guy that bought 85, 84, there's only one guy that got the ultimate bottom. Let's be honest here. And I mean, Terry, hello. Thanks for joining in live. Nice to have you here, my friend. Stanku, it's always good to have you. And Chris Watson, nice to have you here, my friend. You guys, me neither. We didn't buy that ultimate low. And what's the point of sitting in this for 2-3 months, 3-4 months, incurring daily fees and hoping and not sleeping, worrying, are you going to wake up, is my account going to get liquidated or stopped out? There's no benefit for us drying that. Wait for the momentum, we grab it, we ride it, we enjoy it. It's as simple as that. And that's it. That's the closing remark for Bitcoin. Now we can dissect Bitcoin further on smaller time frames. I do that in my Discord. I trade that in my Discord yesterday. I tried to trade long there, and I managed to. I won't say it's not a. It's one of those traders will say. It's always I say, it's a sea of shitty trades for one great trade that makes all the difference. Yesterday was a sea of shitty trades for me. Okay, made 3% here, 6% there. Nothing, no 40, 50s, nothing that I can, write home about. And how's your trading doing, guys? I mean, there's about 30 people joining in live. Let me know, how's your trading doing? Rank it. Let's rank it. Yesterday's trading, I would say, is a 4. I can't say 4. 4 is probably break-even territory. Let's say it's a 6. I'm a 6. Wizard, in the comments there, let me know where your trading is ranking at right now. I know you're really busy. Braveheart says, he's a shit. So it's not even on the scale. So put it in a number, Braveheart. I would love to see where it is at in all fairness. And yeah, so let me just quickly share the setup that I took yesterday, so you can just roughly see where my mind was at. So I was looking at Bitcoin on the 1 hour time frame, and I'm just going to open and make the chart a little bit bigger, and I need to bring this across, otherwise it's not going to work. Wizard is going to be like one more minute or something. Chris says he's a 0 and Terry says he's a 5. Chris, come on, buddy. We need to turn that around. We need to get you to a 6 as well. Braveheart minus -10. Come on, no, man, no -10s. Can't be that bad. Then basically you're paying somebody to throw your money away if you had a -10. We need to work on that, my friend, but we'll get there. We'll get there. Let's look at yesterday. What do we have? We had on the 1 hour the establishment of an uptrend. Now, the buddy indicator does things very simple for you. It does the analysis for you, and it gives you a little bit of a recommendation there. So the trend at that stage was blue. Overrides, the color is blue. It's telling you that it's a bullish trend. Then at that stage, it would have given you the momentum. And the rule that I say is when we have that shift in color, so it starts turning blue, I then dive to smaller timeframes to look for my trade. So I'm just going to mark that line over on the 1 hour, and I'm going to stay on this chart just to simplify this. So I'm going to go to the 1 hour time frame, and there's the line. Then I want the 1 hour time frame to do exactly the same. So what did we have there? We had that scenario there where the market just didn't get there, okay? And then we had that scenario there where the market started moving again. So each of these instances, I then dive into a smaller time frame and then look for the breakout there. Meaning by the time that we had the first pivot, okay, let's just stick with the one that I took. By the time that we had the pivot, now we've got the hourly, we've got the 15-minute, you go to the 8-minute, it is blue. I wait for this to turn orange and then blue again. It's as simple as that. And timing wise, I was around that range. So my entry was there. And I wrote this all the way to there, that point there. And that was the trade. You can use the speed resistance fan to track the highs, to keep you in the move for as long as it's possibly there. Higher high, higher high. And around that area, I called it a quits. It's as simple as that, guys. So it's a simple trade. I didn't make a hell of a lot of money, to be honest with you. Risk 3%, made 6%, but I did it on the Prime XBT copy trade account. And you guys can go and check that out. Links to all of that is in the video description. So you can go and follow the strategy should you want to do so. Haven't gone any other trade direction just yet. Okay, so for today, the trend for Bitcoin, if I now have to scale this back to 4 hours just to give you guys a quick heads up what my trading will be for Bitcoin. I'm waiting for this to either turn bearish and then dump lower, or build a base and then I will re-attempt another long. That's the game plan for me on the higher time frame. So I'm just sitting on my hands with Bitcoin. But this then brings me to the interesting stuff. And this is gold. And I'm going to bring up my friend Wizard here. Wizard, how are you doing, buddy?
I'm very well, thank you. Yeah, it's been a fun start to the year for those in metals.
I think what we need to do is we just need to do a rebrand for Braveheart's sake and for Chris as well. We do a rebrand and we just call it alt metals. Because because we stuck on the narrative that the alts are the ones that does the 1000x's, and now metals are doing this. And everybody here, and I think Wizard, you'll be able to support me on this. Everybody here that's gone through one alt season or gone through one crazy alt season, you're OGs in a breakout environment where the whole metal industry, Those guys are dealing with a parabolic rise. I think if I was them, I would be shitting the bed because none of their strategies are basically adjusted for this, and we sorted for that.
Yeah. Well, from an algorithmic point of view, it makes more sense, I think, given the liquidity in metals, and that's probably one of the key points to bear in mind. Given the liquidity in metals, is they move relatively like they should. I mean, some of these moves aren't particularly normal, but the depth of liquidity you have in gold is exponentially bigger than what you have in Bitcoin, and a lot of
Gold
this
is what,
move.
35 trillion Bitcoin?
Yeah, 35. It's approaching 40. But
Or 40, sure.
yeah,
Get my water. That's crazy. So,
crazy.
I mean, and it means that we as traders, sorry guys, we as traders, we can get in and out at any price point basically without even doing anything. So just ride the momentum. That's the beauty about this. So you're not late. There's momentum. You're early. Just as long as there's momentum, you're still early.
Yeah, and it's how you look at what your trade is. If you're looking at you want to hold a 50% spot move, potentially that may have gone. However,
Yes.
it's more picking the trade you want to take. Ultimately, there's a million trades a day on gold that you can possibly do, a million setups. Most of them won't work, but there will be some good ones, and being able to spot where we have it in this sort of environment. I think I spoke about it last time I was in. My typical strategy is to find volume in order blocks, particularly on retracements for bounces. And in this sort of environment is where you typically see it. You can see where you've had the pullbacks. It tends to react inside one of those zones, and then you get the move and you can trade the breakout. You can might be, for instance, you have a strategy where you look for a bullish change of character and then you take it on the break of structure.
We can actually look at that a little bit. Let's quickly. I've got a frog in my throat. I'm going to mute myself and just sort out the frog real quick. Give me a sec. Let's see. The frog is gone. My voice is back. My radio voice. Let's see. Terry is saying he's switching on to watch us on TV. Terry, nice to have you on TV. So I'll give it TV voice. Maybe we should have done some makeup as well so we can look presentable TV-wise. That's the glory and the beauty of trading for a living, guys. You've got tired, baggy eyes, people staring at charts all day trying to figure out what's next. So let's have a look at this real quick. So for me, the simpler thing is what I think you're trying to move to is, look at this. Once you have a consolidation and you start leaving the range, it's very simple because we're trading. That's your cue. And it's going to listen to that kind of environment each and every time. Consolidation, leave the range, get in. You don't need to overthink this. Where with Bitcoin, we now adopted, because it's chopping it sideways, trying to figure out how these highs and lows work. Where with these metals, you can just ignore the highs and lows. Once we're out of the range, you get in and ride the thing until it starts doing just that, going range bound again, and then you can choose to take profit and stuff. And then, yes, you can ladder in. I think, like you say, you've got your order blocks. You've got various ways where you can use different strategies to get in there. So gold being gold, I mean, it's there. But I actually want to talk to you about silver. Maybe we can talk about the silver supply. I mean, there's a lot of the one thing that we have with gold is big question mark on gold. And we've got gold. That's a proof of work coin. A proof of work coin for the last 5,000 years. People have been using gold. So I think, in all fairness, we got hung up on the Bitcoin is better with its 10 years of proof of work in the previous. Michael Saylor, what was that?
10,000.
Yeah.
10,000 years of.
That's crazy. Proof of work, it's there. So you have that. And then we have a scenario now where the ratio, I've got the data somewhere here, but the ratio is for where every 1 ounce of gold you mine, you typically get about 10 to 13 ounces of silver. So there's a gold-silver ratio that normally says if silver's price is about a 30th of gold's price, it's undervalued, and if it's at a 50th of gold's price, it's roughly overvalued. And silver is moving into that scenario where Gold now needs to move first. You can see silver isn't doing anything. People are questioning this. Gold now getting a higher valuation would then give more room for silver to go. And that then sparked the idea for me is, okay, so silver is doing well. But we know that 80% of silver is actually mined as a byproduct. It's not directly mined as a silver mine like you have with gold, because when you mine for metals like copper, zinc, and those things, you get silver as well.
Yeah.
And that thing, and that's why I'm thinking, okay, if we're talking about gold and we're talking about gold's supply, with Bitcoin, it can be verified. It's very simple. You've got the wallets, you know where the Bitcoin is hiding. But have you been able to go to Fort Knox to go and look at all the gold bars? Are they
We
really
never
there?
saw that. It died out pretty quickly, didn't it? When Elon Musk said, let's go to Fort Knox and see if the gold's there. We never saw
Yes.
the gold was there. It died down pretty quickly.
And the
It went
Swiss,
quite
I mean, we
quiet on
like
that
the
one.
Swiss. But does the Swiss have all the gold there?
Yeah,
You know?
it's inside the vaults.
So we're talking scarcity, and the whole drive narrative behind this is we're trying to move capital and protect it. So the gold bars are somewhere there, and we're speculating on the gold price. But in all fairness, when shit hits the bed, there's no way that you can redeem your gold back, especially if
No.
you're a trader at this stage, because you're not owning the spot gold as such.
No.
And
There's a
this
premium
then opens
spot.
the door. Yeah, and there's a massive
It
premium for
trades at,
spot.
I think silver trades at around sort of a $20, $25 premium in physical to derivative.
Yes. So and then you've got your broker spread as well. So you'll buy it there today spot, and then if you want to sell it again, the broker adds onto that as well. So you need, well, historically, not recently, you needed 3 years of silver growing up in order for you just to break even with your spot silver. So only those guys are only seeing slight profit now. That makes us believe, from a technical point of view, that there's more room to go. Although these weekly time frames look ridiculous, big giant blue candles like that look ridiculous. And in all fairness, it is ridiculous to a point. But those guys are only being able to now go and realize their gains. And that's why I say we've got an advantage. If you bought silver at $24, you're not going to want to sell it now. You're going to want to hold this, because how high can it go? And so there's going to be people trapped. So traders, we can benefit this. We can benefit to this better than them.
Yeah.
And this brings me into the supply. That's actually what I wanted to talk about. The supply, the amount of silver demand that's there. And at this stage, ramping up a closed mine, because it's now profitable to mine again, takes about 6 to 24 months, depending on the jurisdiction you're at and how good you're at greasing the wheels. This means the supply shock that everybody is seeing, and that's why they're buying now, will probably only be able to get made good on 6 to 2 years from now. To open a new mine where there's metals takes anything between 18 and 20 years. So the supply crisis, it's not going to be resolved quickly. And although we are scared that this is turning parabolic in the same way as an alt season, and it's going to burn everybody drop down, the utility behind these metals is what's driving this. And the utility lies in that nobody's going to stop buying smartphones or stop using batteries or any of these kind of devices that has those metals in. And the demand for that's only going to go up higher still. And with the US maybe bullying everybody into so that they can get into the market for manufacturing, the reality is everybody's just trying to outbid themselves just to secure the stuff so that they can continue their production. And this takes us then over to copper. And I want to hand over to you, because what's your thoughts on copper? Because you were talking copper, palladium, and all the other metals a while ago.
Yeah. I am very bullish on copper and have been for a considerable amount of time. I think the best way to explain it to people in sort of the differences is gold, whilst it has some industrial use cases, it is purely a macro asset. It's purely macro
Monetary value
led.
storage.
Yeah. And the people buying it now, when you see the big legs up and you're thinking, who on earth is buying silver at these prices? it's central banks and governments. It's people who are buying in billion dollar clips. Silver sits on the borderline. It has some macro correlation, but it has some industrial cases. And we're seeing a squeeze, particularly from the Chinese in silver, which is leading to the parabolica, because you see it in the prices. If you look at because silver is priced in different markets, you see the Shanghai market will then trade at a premium, and then you'll get the American market will buy it up to try and close some of that arbitrage. So it's being led by Chinese buying more than it is really from American buying. Once you go down the scope, palladium and platinum are very much industrial metals. They're used in industrial use cases. They're used in industry. And as such, we're seeing that bid up. Copper is really interesting because copper is pretty much mostly an industrial asset. And where a lot of the copper demand will be is in a lot of the capex we're seeing. So, for instance, with the AI rollout and the data centers, that's who's buying a lot of this copper. I mean, we had Meta results yesterday, and Meta had announced that their capex bill has risen to $140 billion a year.
How much that?
$140 billion a year of capex, right? And what are they buying?
If you want to save, you get your copper early now. That's basically what it is.
What are you buying? You're buying copper, you're buying chips, you're buying cement, and all of these things will get a bid. Now, copper is interesting because there's a lot of it's a structural deficit that continues to grow. At the minute, the deficit for copper is quite small. However, as we move through the years, that begins to expand, and you don't have the reserve headroom to cover that. Now, you are also seeing some of the dynamics in the market of what we call in economics substitution. And so there are some use cases where silver is used for things and copper is an alternative. However, because silver gets so expensive, people typically turn to copper. Copper is now going up as well. And you're seeing that real drive to try and accumulate all of these supplies. And as you mentioned about the coming online, it's pretty nuts. It takes 20 years to get a mine. Most of the mines are in places which I will say are not the most politically stable. I will say like places like the Democratic Republic of Congo, where there's a big copper mine, not particularly politically stable. Neither is Peru, neither is Chile. And so there's a lot of bureaucrats blockage in those, even to get the mines on. We're seeing some of the US begin to push into mines. However, it takes 20 years to build a mine. And so you're in this sort of structural deficit that I don't know where the relief comes from. Copper is an interesting one because copper will move different to silver in the fact it won't be as explosive, but it will be very gradual. And in some of the projections that I've been looking at, you start to see the real decoupling for copper once you get into sort of 2027 time is when you'll start to see that begin to really break out into quite a strong decoupling.
And that then tells us and another way to look at this as well is if just compare the market cap as well. If you've got something that's got a $1 billion market cap, its emotional market cycle is going to play out over a scale of time, considering the amount of market cap, and the amount of buyers, obviously, and then that will give you a good idea or indication of scale of time. These things have got insane market caps. So where an alt season would typically be like maybe a calendar, this could potentially be a year or two kind of scenario where it's going to stay ridiculous like this and then have a giant crash, maybe leading to some world economic meltdown or something like that. And the best example, I don't know if you guys had this in the UK, was it, is when COVID struck. For some reason in South Africa, toilet paper became, oh shit, we're not gonna have toilet paper. So
Yeah.
people were rushing to the stores and buying up toilet paper like crazy
Yeah.
because
Yeah.
the supply shock said that that was not going to be there around. I don't know. It was like a trending thing for us. I don't know what you guys had.
It was over here as well, and it's quite interesting because there's a psychological phenomenon when you have disasters like that. Is people feel comfortable when they buy the biggest type of thing, and given the fact that toilet paper is so big, people feel psychologically more prepared if they have like bigger. If they've got
Big
bigger
parcels.
stuff, yeah, which is why like people feel more secure if they've got like bigger boxes of cereal in incidents or bigger. They buy the big bags of rice. There's a psychological phenomenon where people feel more comfortable if the item they're stockpiling is bigger.
It's bigger. Well, that's an interesting thing. So, but now to get to that psychological point, I believe that is what's happening on a global scale as well from a trading point of view. People are seeing the shortage, and everybody now is trying to outbid each other to kind of accommodate for what is there. And on all fairness, in reality, at some stage there will be the emperor's clothes. The emperor will be revealed as being naked. It wasn't such a big deal, and with Trump stirring up, you never know what tariff he's going to throw in next. We know he's driving to drive down the Dixie, to uplift the U.S. economy, to start to give themselves a head start in manufacturing, because nobody buys from them. They buy from everybody, so it's constantly an outflow. So they want to turn that around, and this then sparks the idea for the super cycle, which is what we've always been talking about. And I'm not hung up on the idea, but let's zoom out on the monthly and just look at this real quick. So I'm just going to hide the indicator for now. Just to have a look at this. Everything has been inversely correlated, meaning every time you had an alt season or the stock market done really well, it's typically in the relation where the dollar is in decline, because it's a risk on, risk off environment. And if we look at the dollar from 1979 all the way back down, where we're at right now, where we topped around, was literally at the top of yet again another channel. And we are breaking a long-term Dixie trend as we're speaking right now. And if Trump's open about it, I want to make the dollar less valuable.
Yeah,
that's the narrative. So where's all that treasury bond money going to want to go to? Because they're not going to want to be in the bonds anymore. They're not going to want to be there. They're going to need to look for some other vessels. Yes, the rotation is not in crypto's favor right now, but with AI and the narratives around it, that will change. And we just need to be open to the fact that there is that potential. Yes, and the time scale of this, I mean, if we consider this trend, when we're looking at 2030, 2035, thereabouts, so it's still a long time. So if we say super cycle, it's not you're going to get super rich next year. It's just long term. This was potentially a version of a super cycle. This was a version of a super cycle. I mean, that's just the reality of that.
Yeah. We're into a that's leading that super cycle, but also from the capex perspective is we're seeing large scale capital expenditure on projects, which is leading to a commodity super cycle. Now, I don't know if people remember, it was before I was trading, but when China built the Three Gorges Dam, they kickstarted a 10-year commodity super cycle. You saw commodity prices go absolutely ballistic. Yeah, it's a pretty incredible structure, but yeah, that kickstarted a 10-year super cycle, which only got decoupled by the 2008 crisis. And I think we're seeing that again. I have got a few graphs that I did for my if I'm sharing the right. I don't know if I'm sharing a screen.
I'm looking at your gold spot now.
1 second. Let me share. I'll share an entire screen because I did make some little charts, if that comes through, of my bull case for copper.
What I'm going to do is I'm just going to take our camera. No, you can leave it expanded. They don't need to look at that. I'm going to do this, and then I'll just add you there. and remove. There we go. Okay, now we
So-
got it.
Yeah, so when we were talking about some of the supply issues, we can see here that supply remains relatively flat, with
Consistent,
demand.
basically.
Yeah, with demand kicking up, and we have this projected 4.5 million ton deficit, which at some point needs to get
Everybody's-
filled.
Yes.
And you see, this will lead ultimately. There is potentially a crash as we see a cool off. I'm sort of the persuasion that we possibly saw this crash when Trump did the tariffs. If you remember that candle down on
that
copper
could have
was
been
pretty violent.
violent, yeah. And it could have been the case, yeah. You would never know.
But we
I
just
mean,
see
copper went from.
Oh, it was.
Yeah, that was a. Let's see how many percent it went from. $10,000 a ton to what? $8,000 a ton.
Yeah.
Around that time, 10 to 8. So
Yeah, it was this
big
candle
move.
here.
Yeah.
I was short and had a take profit here, so I was very, very upset by that. I shorted this retest and had my TP here, and missed all of this move down. But it's all fun and games. But yeah, you can see just a steady rise up as we have that structural deficit. And then if you look at sort of where some of the key elements to it is, we've obviously got the industrialization, but we seem to be investing in a lot of things that are very copper heavy. You've got defense spending at all-time high, which a lot of munitions are made with copper. You also have grid networks, which in the Western hemisphere at least have got to a point where they've aged considerably. I know that's something that Trump's spoken a lot about, and it's one of the
That needs
bottlenecks to
upgrading,
green
yeah.
energy. Yeah, because the US grid hasn't really had any substantial upgrades for a very long time. Neither has anything in Europe. And we see here some of the use cases. Offshore wind uses nearly 10,000 kilograms of copper to produce a megawatt.
That's a lot. That's a lot.
Um,
So we need a lot more of that. And I mean,
yeah.
And you have info on batteries. I mean, we need batteries, data centers. There's so much more that needs that. I mean, the deficit's 300,000 tons in mine delays alone for copper.
Yeah, yeah, and the data center one's really interesting because copper takes up such a small percentage of the data center total capex that it's never really going to be a demand destroyer. So the people building the data centers with all the capex, they aren't bothered about a 25-30% rise because they can pocket the bill, because they've got a load of money to spend, and for them it's a missed opportunity if they don't spend it. And similarly, it's a smaller element. It was one of the things that Mark Zuckerberg said yesterday in one of his statements. He said, because he was pressed on the capex, and he said, well, if we don't spend it, we miss out on trillions. So if we don't spend $150 billion to get ahead in the infrastructure,
it's going to destroy their year's earnings if they have to pay for it, and then that's going to be bad for the investors. So they have to. So it's not an option.
It was crazy, and you can see on the chart where he was talking, because if we go, I'll put it onto the 5-minute, because you can see here this was the capex candle, and then he started talking about the results, about
you can't
how
do anything but
especially the results were very good, but they announced very, very good earnings, and he's basically positioned it as, we can afford to spend the capex. Whilst it seems a lot, we're making billions, we're making tens of billions of dollars in revenue and profits, and so that is a cost that we can then absorb. And so that sort of leaks into the copper question of, if we don't buy it, then we lose it. And we see here about the lead time. Mines discovered today will not produce until the 2040s, so you've got that 20 years, and it's $350 billion. Now, this is part of my overall commodities bull case. Is whatever you think about all of the green initiative and all of the net zero, one of the real tragedies of the push to net zero is financing and investment in the commodities production in the West went down, which is why China's pulled so far ahead. You've seen it in the oil industry, which
Correct.
I also think oil will hit $75 a barrel this year, because ultimately they were starved of so much investment. Like you've got, when you had BlackRock and things going net zero, they weren't going to write down 10, $20 billion loans to build new mines, because it added to their carbon footprint and what they had to report on. And so they didn't. And so they starved that capital. And so there was no investment. And so now you end up with structural deficit that the Chinese were happy to plug, because the Chinese don't particularly care too much. For them, it's as long as we have it, we don't really care how much pollution comes from doing it. And that's why China controls so much of the rare earth metals, because it is just such an inherently dirty business that they're happy to take it on. And we look here, this is where some of the key mines are. We've got Chile, which strike and water risk. You've got the African mines, which Africa's really, really difficult to get insurance for mines. Obviously, it's a difficult continent to do business on. And then you've got Asia, where you've got rainy season and weather, etc. And so there's not really anywhere that you can have a consistently well producing mine, which leads into a couple of my theses. So I think copper miners will do very well, and some of these low cap metal producers, because there will be a lot of now investment and M&A and push towards. It's now, with commodity prices where they are, it's now 10 times easier for a mine to go to a bank or go to investors and say, look, we need a loan to build a new mine, because they'll just write the check. It's the same with AI. If you had an AI project that you wanted to do, or a data center, you just had to ask a bank nicely and they'd write you a blank check for whatever you wanted. And I think we're going to see that in the metals industry, but it's too little too late. You're still going to end up with this trending level down. And so every metal now will get a bid. Aluminium's the same, zinc as well. So yeah, that's my key bull case, and I think there's some fantastic opportunities still to play it. The Brazilian index, I think, is very, very interesting to keep an eye on, and I think that will have a mega 3 or 4 years at least, because that's breaking out of very, very long-term price suppression, and in quite a violent manner. If all that makes sense. There was a lot of information to cover there in the slides, but yeah, that's my bull case for copper. Ruda, I think you've disconnected, or you're not on the screen, or I might have disconnected. But yeah, that's my bull case for metals. Yeah, feel free to fire in any questions if there's any sort of metals you want to discuss, or anything you've got your eye on. Particularly on my eyes is stuff like aluminium, zinc. I think uranium's interesting, but uranium is going parabolic. Rhodium is a very interesting one to keep an eye on as well. Oh. But yeah, I think we see commodities continue on a super cycle this year. Oil, especially, oil is moving up quite sharply now, which, depending if you're on the right side of the trade, is good. I'm quite sizably long oil, so that's one thing on my mind. But yeah, oil you can trade on Prime XBT as well. That's quite a fun asset to trade on there, as is natural gas. And natural gas was my largest trade of the year so far. Yeah, that went parabolic. So that's a very good one to have on your list, particularly in the next couple of months as we are in Widowmaker season, where the volatility is pretty much off the charts. Anyway, I've got to drop for a meeting now, so hopefully Rudo's back soon. But yeah, no, thank you, and trade some nice metals, but be responsible because it's volatile out there. Right, fantastic. Thanks all.